No, you. It hasn't come yet, sir.
No, yeah, you come very soon.
No, you. It hasn't come yet, sir.
All right. So we are live now. Just like I said, when we finish, I will post Saturday recording and Friday recording, so that if from there, if you enter, you see all the series. But the difference now is this one. I'm gonna put chapter 6. So I'm gonna start to put all the chapters as we record them. Is that okay?
Yes.
All right. So we will have to go to chapter 6. That's where we stopped our last class was chapter 6. Oh, sorry, no, journalism. Our last chapter was chapter 6. So we're gonna go through them and see what we talk. Of course, we're talking about premiums, proceeds, and beneficiaries. Is that not supposed to be how we are? We finished chapter 6. We should be on chapter 7, underwriting and policy issue. Who remembers? We are discussing about
We finished 6. We should be in 7 now.
We are in 7.
Yeah,
Yes.
we are on life underwriting and policy issue. Yeah. All right. Yeah, we are underwriting and policy. We have even gone a little bit.
Yes.
We have watched the video, I hope, and we have discussed the keywords.
Yeah.
Yeah. All right. Let's start from here for benefit of those who are not here. We can review the keyword and see what some people can get. So this is chapter 7. Chapter 7 is about underwriting and policy issue. And by our discussion, everybody for now knows why underwriting come into be in life insurance, why underwriting was discovered, and why underwriting become a big force in insurance business, determining who to be approved and who not to be approved. Before underwriting was introduced by insurance companies, after several years of loss in the sense that people who are not supposed to approved are approved. And based on that, insurance companies were receiving a lot of claims every day, day in and day out. So at the point they said, look, what are we going to do to be able to make sure that this claims upon claims coming to our companies can be minimized? So the issue of claims upon claims coming to their company is what we call adverse selection, which is people who are of high risk. They always seek for insurance coverage. So before then, almost everybody, but those who are terminally ill, they put the policy, they go for insurance coverage and they will be covered because nobody actually know what condition are there. Nobody actually knows what condition are there. So everybody approved. Immediately you apply, you're approved. So the consequences and sequences of people who are of higher risk. We have discussed the type of risk. We discussed about the standard, preferred, and substandard. We have done that, I think, in chapter 5. So you can see that people who have substandard risk are difficult to be approved. If they are approved, they have a very high premium. That all of us know. Then followed by people who are of standard. Then preferred is those who are just like new car that you have not, nobody have driving before. So they are the preferred. So the used car are the substandard. Then those cars that cannot even be repaired are the substandard. So the adverse selection is this tendency for those who are highly at risk, those who are highly sick. For instance, the terminal aid one, we seek for insurance coverage and they will be covered. That was adverse selection. So because of that, insurance company now introduced underwriters to check adverse selection. So that's why underwriters come into being. Now, we talk about attending physicians, which is the APS. This is one of the information insurance, when you submit that application to the insurance company, the insurance company through the underwriter will request for APS from your provider, your primary provider. That's why when you write the application, or if somebody has written your insurance coverage application, the person will ask you your doctor's name, your doctor's address, and all those, so that the underwriter can use the information to call the physician to ask for your APS. In the APS contain details of your medical information, more especially your current and recent medical education. So medical information. So the one the underwriter cannot see through the APS, they will see it through the MIB. MIB is Medical Information Bureau. MIB is where every information about everybody, your age, your even your driving record, whether the person has gone to court, if that person has have any court issue, anything in fact concerning that person will be seen at MIB. So, but does MIB cover all the needed? No, MIB does not cover all the insurance all the underwriter needs to process the application. So what the underwriters do is they will go to your physician, your primary provider, to get your immediate APS, which is what? Your medical record. So the medical record with the information they have from MIB, and the information we gave when the application was filled, you gave to agent when the application was filled. Those three things will help them to know whether you'll be approved or not. So adverse selection gives rise to underwriting process. So the conditional receipt we are talking about is when you submit application, you can submit application with what? Initial premium. So if you submit application with initial premium, the agent will give you what we call conditional receipt. So conditional receipt actually does not mean that you have been approved. No, the conditional receipt typically mean that, look, you have submitted the application with your initial premium. So if your application is not approved, what happened? That very first day you did the application will be the effective date of that application, of that your coverage. So the feed underwriter, we say the feed underwriter is you, who is the agent, or you, who is the producer. So three names you can use to identify feed underwriter. A feed underwriter, an agent, and a producer. All of them are you. You that's now trying to get this license. If you get the license, you become the agent, you become the producer, you become the feed underwriter. Most times people get confused, even me. I remember when I sat for this exam, when I see producer, I'll be thinking that the producer is the company. No, producer is never the company. Producer is you, the agent, you, the feed underwriter. So please, that is the three names you can use to identify yourself as an agent. You are an agent, you are a producer, you are the feed underwriter. Why do they call you feed underwriter? Because you are the first person that interact with the customer. You are the first person that interact with the client. You make the first move. You can describe the client because you know the client. The insurance company does not know the client. The underwriter in the office does not know the client. It's you who knows the client. And that's why you have fiduciary responsibility. You have what we call fiduciary responsibility to your clients, which means you are representing your client. You are equally representing who? The insurance company. The agent represents the client, the agent represents the insurance company. So if by chance, if anything happens, the agent goes to court. Let's assume the agent the client take the insurance company to court. Of course, you're still going to protect the interests of the insurance company because they are your employee. you're still going to protect the interest of the agent. I mean, the clients, because you work for the client, you work for the insurance company. So you'll be at the middle. Of course, you're not going to favor anybody. Meaning, as an agent, which you will be, you have to be very truthful to the two sides, both the client and the producer. Then you as an agent will also at a point grow to become a broker. When you become a broker, you do not have any fiduciary responsibility to the insurance company. No. You have only fiduciary responsibility to your agent. Now we say the broker work for the agent, but work for the client, but the agent work for the client and the insurance company. Is that clear?
Mm-hmm.
All right. So there we now went down to what we call free look period. We are trying to, all of us have known this. We are trying to review before we go to where we start. So we now move to free look period. The free look period is what is the period when you submit the application. That the application is approved. You submit the application with initial premium. The underwriter in the office will go through your application, approve your application, which sometimes we call the acceptance of the offer you made, because it's you, the applicant, who makes the first offer to the insurance company. The insurance company wrote the contract. You go through the contract, you make the first offer. So you will always see in exam when they say who makes the offer. Is you, not the insurance company. The applicant makes the offer. Then the insurance company will accept the offer. They go through your application with the initial premium paid. They go through it. If they approve, they now say, all right, since we approve you, we're going to make a counter offer to you. So the counter offer, they sent a booklet to your house, either through the mail or maybe through one of their staff to bring the booklet to your house. If they send it through the mail, what we call the free look period is the period they give you to be able to go through those booklets they give you and return back to them. The period you go through the booklet they give you and return back to them. As I'm talking to you, I have one now. I have one which I have to submit back to them. They say I should bring it before 31st, which is not possible. There's snow everywhere. I couldn't even go out to mail it out. So they say 31st. So that free look period is the period they give you to go through the policy that was approved. Remember, during the analysis of the policy by the underwriter in the office, the underwriter can decide to change your risk level. The underwriter can decide to change your premium. The underwriter can decide to change your policy amount, for the face value. The underwriter can decide to change anything. So that's why the underwriter will make a counter offer to you. In the counter offer, the stated amount of the policy will be there, the premium will be there. So when they give you the booklet contains all those changes. That's why we call it a counter offer by the underwriter. So you go through it, you now sign what we call a policy receipt or delivery receipt. There's a delivery receipt there, you sign it. Then there's what we call statement of good heads. You sign it. You sign these two forms and submit back to the insurance company. So that's exactly what I'm telling you that I have to submit back. They gave me up to 31st of this month to submit it back, which I think it may not be possible because of the snow. We can't go out. So that period in which you get that paper booklet and you review it and submit back to them is what we call the free look period. So we normally say, if they deliver the paper to you through the agent or by the insurance company, they come to your house and knock and give you the booklet. They give you 10 days. 10 days is called free look period, 10 days free look period. If the booklet was submitted to your house, they come to your house and give it to you. Now, if the booklet, you got it through mail, the free look period is what? 10 days. I mean, 30 days. So 30 days for many other policies. So just like my own is 30 days. But however, I didn't receive before that 30 days. I just received about last week, but they said I should submit to them 31st, which I don't think is possible. But however, when I sign, I'm going to sign maybe 20 something or showing the day I received it, So based on the day you receive it, I think they can be able to say, oh, this guy received it so date. It doesn't pass the 30 days. So 30 days when you get the booklet through your mail, and 10 days is when they submit the booklets by hand, either by the insurance company that drive there to drop it for you, or the agent who wrote the policy brings it to you. So that's a free look period. 10 days when they submit they bring the booklet to your house, and 30 days when you get it through your mail. So please remember this free look period. It may be in the exam. Now we talk about the insurable interest. Remember, you cannot write a policy to somebody that you do not have any insurable life on. You must justify why you must write somebody policy. So insurable interest, we said, exists during application, and it ends with the application. Do they ask of insurable interest? Of course, the ask of insurable interest in a policy when you file a claim, if and only if you are the policy owner and you are the beneficiary. Please remember this. This is one of the things you should know. Insurable interest is what? Insurable is, if you have insurable interest in somebody, means that person you have insurable interest, if anything happens to that person, you must feel a financial loss, and otherwise you must feel that this person, you lose somebody, and if you have an impact on your finance, whereby you must have to contribute financially. You must have to show that this person, justify that this person, you have a relationship, a very good relationship with that person. So anybody you have a good relationship with, more especially if anything happens to that person today, I'm not saying if you contribute to, if somebody die, as we do in our community, in African community, people will contribute money. I'm not saying if somebody died, they tell you to contribute money. You contribute money to the burial, now becomes, you now have insurable interest on that person. No. The person you have insurable interest must have a financial, emotional relationship if that person passes. That will only justify that you have insurable interest on that person. For instance, if a spouse, a husband and wife, have insurable interest to each other, you have insurable interest to your parents, you have insurable interest to your children, you have insurable interest to your business partners. Those registered. For instance, if you are two persons register a company, you have insurable interest on that person, and the person have insurable interest on you. So these are the insurable, what we call insurable interest. It must exist during application, which means you cannot put application on somebody who you do not have insurable interest on. It's against the law. If insurance company find out, definitely they're going to reject the death benefit. And we talk about Medical Information Bureau, which is the MIB. That's a medical database where everybody's information is included. It's not only about database. I mean, it's not only about medical data. It's everything concerning you. Even your driving record, the way you drive is there. That is why sometimes if they find out that you have tickets more than 10, 20, 5, I think more than 5 or 10 times, they will deny you because they now know you are at risk to die one day during an accident. You have been getting accident is a ground for denial. Representation. We say representation is when you fill application, those statements that is in the application, you put it in form of representation. They are representation because it's something you write to the best of your knowledge. It does not mean that all that you put there is a guarantee or you guarantee that those things are correct. No. If you said your application are guaranteed or guaranteed to be correct, then definitely there may be a material there that are very, very correct. And they found out means that you have lied. So the best thing to say is that every information in the application is your own representations. So representation is what? statement made by applicant in insurance applications. That's what we call representation. Statements made by applicants on insurance application. So that are statements. Representation. You cannot, if you fill application, you say you guarantee everything you write there. Even your date of birth, you're not sure that is correct. That is the truth. If you say it's correct, maybe the spelling of the month, you may not get it right. So that's why every statement you make on the application is known as representation. Then we'll talk of risk classification. We say there's three ways you can classify risk. Of course, that is not only where. When you begin to fill the application, you see that risk classification will have preferred helix, we have preferred, we have standard, and we have substandard. In the application, you see preferred helix, you now have preferred, you now have standard before substandard risk. But for exam purposes, what we're going to deal with is what? Preferred, substandard, and standard and substandard. So in this risk classification, the premium, the amount you pay for your policy differs. The preferred is, of course, the cheapest risk classification in terms of your premium. Standard is the main what you're supposed to pay. Substandard is the costliest premium. Of course, we said preferred is 15%. I think preferred is 15% less, either 15 or 25% less than standard. Standard is the normal premium you would have paid. Then substandard risk is about 75% higher than what? Standard. So that should show you that preferred is the best. If you're preferred, it's just like you don't have no medical issue, no medical record, nothing. You are just as free as a newborn baby. Not all newborn baby. So that is the risk classification. So based on this classification, the premium you paid will be determined.
Icon on the top left of your lap pad, then select audio to play mode. If you disable the sound effects, the lap pad will slide up whenever there are.
So, and again, you can see that this risk classification is the determinant of how much you pay. In fact, it's the basis of your payment. Immediately put your classification. That's why insurance company does not play with others. And what helped them to determine this risk classification is your MIB, information from your MIB, information from the medical doctor, which we call APS, the information filled during the application. That is the three things from where they got their information to classify you. And who does that? Is the underwriter in the office. Remember, you have two types of underwriters. The first underwriter is you, and you are regarded as field underwriter.
Yeah.
Then this other person in the office is the office underwriter. These are the people that determines whether you'll be approved or you'll be denied. So they are the office underwriter. The field underwriter is yourself, because you have a personal encounter with the client or the customer. The questions you ask the customer and the replies he gave you, which you put in the application, will help the office underwriter in making his or her own decision based on whether to approve the applicant or to deny the policy. So that is the underwriter. So that's where we, I don't know whether we have done this ones, but I just did a review now. Who can help me to know where we stopped? I can't remember where we stopped. I did a lot of classes. So, all right, let's see. Let's start from here. I don't know whether we have passed here. Let's look at agent responsibility. Remember, I said as an agent, you are responsible. You have fiduciary, what we call fiduciary responsibility to your who?
Your
clients.
client.
And who? And again, to the insurance company. As an agent, you have fiduciary responsibilities to your clients and to the insurance company, which means You represent the client, you represent the insurance company. You are the middleman, middle person between the clients and the insurance company. In essence, you are working for the insurance company. You work for the insurance company. Whatever you do is assumed to be what the insurance company do. If anybody takes you to court, the person have taken the insurance company to court. However, the insurance company have a contract, which we call agency contract with you, in which they will give you directions of what to do and what not to do. So if you go above what they told you to do, when they take you to court, it becomes your own responsibility. But if it is within what they gave you, the directions they gave you, or the rules they give you, if it's within there, if anybody takes you to court, that person have taken the insurance company to court. Fine, you don't have anything to say. So based on who knows, maybe this agent may do one thing or other, may not follow the instruction, they bring out what they call error and omission, which we call E&O insurance, to cover you. That E&O covers the malpractice or negligence of a producer. A producer is you, the agent, or the field underwriter. So to protect you generally, they make sure that you are not being moved by any law court. They are there to protect you as an insurance company. They brought out error and omission, which means you buy the coverage, even if there is a malpractice or negligence that occurs, what happened? You have insurance covering it. The insurance will take over. Again, you have a body which we call WFG. However, it's them that can come out sometimes to fight for you. So you are somehow covered. But however, does it make you to do wrong? No. Agent's supposed to be steadfast in doing his or her job, have to be very responsible, not to lie, not to do things that are not allowed by the law. So agent's responsibility is what? Is to play an essential role on underwriting process. Any producer is required to act in fiduciary capacity when collecting premium and dealing with the public. As such, all producer possesses a fiduciary responsibility when engaging what? In insurance transaction. A producer who has an unintentional error or honest mistake has committed a tort. So I want everybody to know this because sometimes we get confused with it. When an agent has an unintentional, remember, unintentional error, which definitely can occur. Honest mistake can occur. Unintentional error or honest mistake. There's some mistake. There's no way you can do something without any mistake. That one is sure. So unintentional error or honest mistake, if you commit it, is called a tort, T-O-R-T. So sometimes you're going to see it. So known as what? An error and omission. If you do such error and omission, because you already have insurance to cover you, you don't have to bother yourself by that. So that's why no insurance company will do business with you without you having an E&O coverage. E&O coverage is not expensive. I think it's about $20 every year or something like that. I think it's $30 every year. It's not expensive. So, but you are required to have it. You're going to have it. It's part of the calculation of what you have to do before you become an agent. So, therefore, the insurer purchases E&O insurance to cover the malpractice or negligence of producer. In some cases, agent may be required to obtain their own E&O coverage. Of course, the insurer, which is insurance company, does not buy it for you. They allow you to get it by yourself, which the law says. It said you may be required to obtain their own errors and omissions. So everybody has his own error and omission. The insurance company does not buy it for you. You buy it because you're using it to cover yourself. So that when there is any error or omission, honest mistake or unintentional error, what happened? You don't need to go. If anybody takes it to court, that person is wasting time because already you are covered. So as a field underwriter, which you are, the agent initiates process and responsible for many crucial tasks, including proper solicitation, completing the application, As an agent, one of their duties is what? To speak to people.
Client.
You have to talk to clients. Of course, Dr. Ruth used to say, you do not, in this business, you do not have an office. Your office is your mouth. So the way you talk to people, the way you get what you want. Believe you me, most people have used this business to make a whole lot of money. So it's just opening mouth, and it does not come freely. Is the knowledge you acquire. Most of us who does not like to talk to people, particularly someone like me, I don't like talking to people, but the business will make you to know how to address people. I'm telling the truth. That's why almost everybody in this business is now a speaker. Is a public speaker. It's the truth. So the business not only help build you financially, give you financial knowledge, equally build your reputation as a person and bring you forward. Almost everybody here now is a public speaker. There are some of them who cannot stand in a in front of 5 people. In fact, in front of persons to speak. But now, some of them now can stand in front of 10,000, 20,000 people to speak. Believe in me. I know one lady, she's a nurse. She did Las Vegas. She's a MC Las Vegas last year. And in fact, last year was the second time. And she was paid a huge sum of money for just coming out to be the MC. And this person is a nurse. She never been MC before. But the business has built her to that point that she can stand down and talk to people. Most people here you see speaking have not been able to speak to people before, but they learn the practice through practice on how to speak. So that's one thing. As an agent, you have to solicit for people, because this is something that everybody need. It's something that everybody need. It's not because of ignorance. Actually, it's not because of ignorance. If not, just tell me the reason why ignorant, I would say ignorant and what not putting things in the right way. If not, tell me why somebody should have policy, insurance to cover her home, insurance to cover her car, insurance to cover her phone, insurance to cover all the equipment in her house.
She doesn't cover
And
herself.
him who covers all those things, he doesn't have anyone to cover himself. It's not gonna, it looks funny. Honestly, no, it looks funny. If you look at it, you use the impartial mind to judge it. Not partial mind. Use an impartial mind to judge it. You have insurance to cover all those things. Then the life who gave those insurance policies to those things does not have anything to cover him or herself. Just use an impartial mind to look at it. So it's just because of ignorance. If not, you don't even need to beg people. Anybody you write policy for, you are indirectly helping that person. The person will realize that you helped him or her when the chips are down. The person will still come back. Those people you'll be asking for to be covered by policy, when something serious happens, they will come to your house. They bring wine to your house, say, thank you for what you have done to me. Because by then, they will understand what you have, the new life you have designed for them. So as an agent, when you write an application, you have to what? Help the applicant to finish the application. You have to obtain appropriate signatures, which means the applicant have to sign signature and you have to sign their signature too. You have to collect the initial premium. Do we continue to collect the initial premium now? Yes and no. Most often, everything is feed online. So that's why they will ask you to do what? Submit your banking information. So if you collect initial premium from the applicant, you still have to give that person, issue that person a receipt. That receipt is what we call a conditional receipt. So if you issue a receipt, a conditional receipt, does the conditional receipt mean the application will be approved? No. The conditional receipt only signifies that, look, I collected initial premium from you. And if eventually that application is approved by the underwriter, the effective date of that policy becomes that date the initial premium was paid And that day you issue the date of the issue receipt, the day you issue the receipt. So that would be the effective date of that policy. And yeah, sure, mean something happened. Please, sorry, let me answer this about, I don't know what they're calling me by now. Sorry, everybody. So that is it. So you are required to have an error and omission. Is compulsory, please. Now, proper solicitation. Of course, as a field underwriter, you have to be able to know how to speak to people. That's another area. Some people, if you tell them to sign on, they say, oh, I don't know how to speak to people. I'm telling you the truth. This place will make you know how to speak to people. You can see that the knowledge of knowing how to speak to people comes through practice and through listening to people who knows how to speak. So some people are afraid to approach other people. Yes, until you start it, you will not know that it's doable. It's the easiest thing you can do. And by the time you start speaking to people, you see that you now have a free mind. A free mind. See, this business can refine you. I'm telling you the truth. It will refine you because when you begin to speak to people, you are free with everybody. When you are alone, you are, oh my God, it's just like somebody punishing him or herself. But when you freely knows how to approach people and talk to people, you have removed burden, unknown burden from yourself. I'm telling you, it's an experience that everybody should have. So proper solicitation is what, as an agent, you have to know your duty and the responsibility to solicit good, profitable business, which means you have to speak to people. You have to speak to people. So do we speak to people every day? Of course. The question now is that what are we speaking to them about? Do we speak to people? Yes. What are we speaking to them about? That is the only thing. So we want now to speak to them on focused things, things that matter, things that can change their life. Some of us can use almost half of our days, most especially those who are not in different kind of work. They can use half of their days just to stay at one place and gossip. So that period can be period of refining on how to, instead of saying things that does not matter, you begin to say things that matters. I'm telling you, it happens to everybody. So don't be afraid that, oh, I do not know how to speak to people. No, that should not be an excuse. In fact, if that is the excuse, that's the more reason why you should be in the business, because it's not going to refine, going to bring out a new you. So that is proper solicitation. At the same time, the agent has a responsibility to do what? To the insurance buying public, to observe the highest professional standard when conducting insurance business. Of course, you have to, as somebody becomes a public figure, you have to know how to talk to people, you have to know how to approach people. That is a skill you will learn. And the only way you can learn it is to attend some meetings, because when you pass, people will begin to teach you how to speak, how to approach people on this business. It's a good thing to do. Does insurable interest exist? That's one question you must ask yourself before you write application. Just give me a second. Give me a second. Let me check.
It's a small. I think we want to fit brands and pot. Sucrose is into other. Sucrose is considered to influence that place in sucrose. However,
Okay, thank you.
and therefore we need to consider unfashionable, almost allowed for some chemicals. Most wonderful solution will achieve level. Why? Of a low glass which means it is not all damage. Even though it offers a low amount of energy to the fact of its the second. Yeah.
Yeah, sorry, please. So we are back. Sorry. So the one question you should ask yourself as an agent when you're writing policy, it means that it meets your client or your customer. One question after writing that person's policy, you're going to write policy of the family members. You have to ask yourself, does this person I'm writing the application on behalf, maybe the policy owner, does he have insurable interest on the person he wants to write policy on?
No.
Oh, yeah, 10 o'clock. So that's one question you have to ask. Did this person have insurable interest on this person? Because you cannot write policy on somebody who does not have insurable interest on. Of course, as an insurable interest is very, 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 very important in life insurance business. There must be insurable interest must exist before you can write policy for somebody. For instance, if I'm an agent, I come to your house, I write you a policy. As a person, you have insurable interest to yourself. If I write you a policy, you now say, all right, I should write for a husband. I want to know whether that person is really a husband. If you introduce that person to me, oh, this is my husband, I'm going to get that person's ID card. So I write the policy for that your husband. You bring your children, identify them, I write policy for them. You bring probably your cousin that is living with you, I write policy for that person. Now you bring your neighbor to me, I will not write policy for that your neighbor because you do not have insurable interest on that person. more especially when you are the beneficiary. More especially when you are the beneficiary. If you bring somebody you do not have any relationship with,
Well, that's done.
then nobody will write insurance policy for that person, because what? You do not have insurable interest on that person, more especially when you are the beneficiary. So if I write policy for your son or for your daughter, you have insurable interest on them. If I write to your parents that is living with you, you have insurable, even if they are not living with you, if they are your parents, you have insurable interest on them. Remember, insurable interest is that thing that exists. If that person passes, you should have what? Financial and emotional loss. So insurable interest is quietly defined so that it will guide you on who to cover. As an agent, can you write the policy? Yes, of course. But if that person you are writing the policy for, that policy owner is also the beneficiary, there's a big problem. It now becomes a business. So insurance company does not tolerate that. They don't tolerate that. So you must have insurable
For my
interest.
lab student, Introduction to Food Science.
So who do you have insurable interest on? Your family members. You have, because if anything happened to them, you have a financial impact to you.
Just call before a breakdown happens.
So please
In your
mute
rate
yourself
with
so I cannot be going up and down to listen.
Call 800-785-5419. 800-785.
All right. So what that shows that it can become a fraud if you now write policy for somebody, a third party. You don't want to do that, because you look at what happened. You can write it and you are paying the premium. If anything happens, remember, when the time for claim payment, the insurance company will now try to investigate whether you have insurable interest on the person. More especially, when you write that policy, you are the policy owner, you are also the beneficiary. Even your own children, if anything happen, or your husband, if anything happen, since for the reason that you are the policy owner, you are the beneficiary, they still want to confirm whether there is insurable interest exists. Yes, of course, your family members, you have insurable interest on them. Why they are trying to confirm the relationship is that to know whether that person is an external person, whether that person is just somebody passing on the road, you write policy for him. Remember, we're going to see it as we go on. Some people use insurance as a business. Some people buy policy. Their own duty is to buy policy. If you want to sell policy, you call them the buy. Some people, their own is to go around putting policy on people, which is very, very illegal in most of the states. We're still going to see it as we move forward. So that's the insurable interest. So therefore, when the applicant and proposed insured are the same person, there is no question that insurable interest exists. Of course, it exists. However, questions are raised with third-party contract. Who is third-party contract? When the applicant is not the insured. When you are the applicant, you're not insured, which means when you are the policy owner, you are not insured. There's always a question raised. That's a third-party contract. You are writing for your son, you're writing for your husband, which means, what I mean by writing, you are the policy owner. You pay for the premium. The policy owner is that person who pays the premium. So if you are the policy owner to your husband's policy, to your child, to your anybody policy, and you turn around to be the beneficiary, there's always questions to be answered.
I have a question, sir.
Go ahead.
So companies that buy insurance for they cover their staff, do they have insurance interest too?
Yes, of course, you see when we say business partners, but however, those companies that are not the beneficiary, except executive bonuses, executive employee policies. In that way, like you now, if you have a company, your own company, you can write key employee policy. The company now is the beneficiary, your own company. If you have, let's assume some of the nurse practitioners or some of the doctors have their clinic, yes, your children can be the key employee, which means you can write policy on them. Who is the beneficiary? The company. Your company becomes the beneficiary.
Okay,
So
okay.
you write policy for them, the company becomes the beneficiary. In fact, that is the best way people can lower their taxes. Most companies, you're not going against the law. You are doing what the law says. Why should you have key employee policy, and why should you have executive bonuses? It's because if anything happened to their key employee, the law gives you whatever claim you submitted will be paid to you. Use it now to recruit another person who you will train to be the key employee as that person who passed. So it's mandatory, and not even mandatory. It's one of the things that our people does not know. Yes, no matter how small your business is, there is always that person. If that person is not around, that business does not work. Even if it's a solopreneur, like you are all, there's still one person there that person needs to be available. So that person should be a key employee. You should write a policy for that person. You know the good thing about it? If you write that policy, the company pays what? The premium. And that premium paid is under company expense. And when you are filing a tax, you're going to file it as an expense. Remember, the tax, we are on tax season. The tax we are filing is what? Your income versus what? Your expenditures. If they do the subtraction, whatever remains is your profit. What government does is to tax the profit. So that is the tax we are doing. So in other words, if you're working, you have a job, it's your duty to make sure you cover all those things. That's why Trump will say you have to pay your fair share of the tax. The fair share of the tax is when you have removed the expense from your from the income, the profit. The profit is what you're going to pay. But did you do all those things you're supposed to do? As a company, it's supposed to have a key employee policy. As a company, it's supposed to have a executive policy. So all those things will help you to do what? To make sure that nothing happens to, because the government is also very, very eager to make sure that the company does not fail because of unforeseen circumstances, where if somebody passes or somebody becomes disabled, the company is no longer to be found. The government wants the company to continue, to continue functioning well, so that what? The company can pay taxes to them. So key employee policy and executive policy are very, very important for you. But our people does not know. So that is the only way, one of the ways you can reduce your tax. Some people pay huge tax every year because they don't do what they're supposed to do. If such people paying those big taxes, if anything happens to the company, the company is gone. Government don't want that. Government want the company to continue. That's why they bring up all these things so you can do it. If anything happens, you can get a benefit from the policy and use it to start running the company as it's supposed to be. So that's one of the teachings you should help give our people. They don't ask how much you're making in a year. No, they just want to know you have a running company. The company pays tax yearly. If that company pays tax yearly, what happened? That company should have a key employee. All right. So any other question? So that is insurable interest. Now, let's look at the following is a list of situations in which insurable interest automatically exists. List of situations in which insurable interest automatically exists. What? An individual has insurable interest on their own life. Of course, you have insurable interest on their life. That's why you can write policy for yourself. But can you become beneficiary to your own life insurance? Of course not. You cannot. There must be a beneficiary on your own policy. You can't be the policy owner and the beneficiary in your own policy. It's not possible. Then a husband or a wife has an insurable interest on their self, of course. Parents have an insurable interest on their children. A child has an insurable interest on parents or grandparents. A business has an insurable interest in the lives of the officers, directors, and key employees, including an employee who produces high volume sales. So you can see that. So the ones they put you on the job, you have on the job, which is the group life insurance, we're still gonna deal with it. Even though the company is what have insurable interest on you, you are somehow the beneficiary. What the company does is that they are the beneficiary. They will give you, when anything happens, the money first of all go to the insurance, the company. Your company now determines how to do it, the amount they will give you. So business partners have an insurable interest in each other. If you have a business partner, you have insurable interest to each other, which means you can write policy for the other person can write policy for you, in the sense that if you write your own, the other person become beneficiary on that company. Then if that person writes his own, you become beneficiary. However, you guys can write, still the business become the beneficiary. Creditors have an insurable interest on life of debtors, but only to extent of the debt. Do you see it? That's why in most of the debts, they will tell you that you must have to have, if you come now, I say you want 500,000 from me. I tell you, one of the conditions I will give you that 500,000 is that you have to put insurance on that loan. Yeah, I can decide like that. If I decide that you have to put coverage on the loan, as a debtor, I'm not doing it because I want to punish you. I'm not doing it because I want to give you serious condition. I'm doing it because I want my money to be intact, whatever happened to you. Whatever happened to you. So that's why in term insurance, we have three types of policy in term insurance. Who can remember? 3 types of policy in term insurance. Remember, term insurance is a type of insurance. Inside that term insurance, we have 3 types of policy. You can remember the 3 types of policy in term insurance. We did it in chapter 4 or chapter 5 here. Or chapter 4. Who can remember the 3 types of term policies?
I can remember.
Increasing, increasing, decreasing, and level term.
Of course, that's the 3 types of policies in term insurance: increasing, decreasing, and level term. So why I remember that now, I'm talking about creditors have insurable interest on the life of debtor. So because creditors have insurable interest in the life of a debtor, which means creditors can become beneficiary to you, who is the debtor. Then in term life insurance, remember we have increasing term life insurance, which we talk about loan. We still have decreasing term life insurance, which we talk about loan, but more especially to home mortgages. If people who started from beginning should recollect what we said there. So that's why a creditor has an insurable interest on the life of a debtor. Let's take for instance on the increasing term life insurance. Is a loan. You come to me, say you want to borrow 500,000. I will say, oh, Mr. Say, I will borrow you this money, but you have to. The condition is that you have to have policy on this loan. Have to have a coverage on this loan. So you went ahead and buy a coverage. Probably you are paying me 1,000 every month to repay me the loan. And I want insurance coverage on the loan because I don't want anything. I don't want any excuse. If anything happened to you, you could not be able to pay. Let's assume I don't want to hear that you lose your job. You don't have money again, you don't want to pay. I don't want to hear it. I want my money to come back to me. You borrow me that 500,000. I say, Shay, put put policy coverage on this loan I'm giving you. You put that would be one of the conditions I must see before I will agree. Now, you put policy on the loan. Now you are paying me $1,000 every month as a process of repaying me the loan. What happened? Now you put insurance on that loan, and you are paying insurance company probably $200 every month or $500 every month, as the case may be. If you lose your job, you cannot be able to pay, or maybe something happened to the person, not like disability, or even let's assume something like the person is no longer here. I will go to the insurance company to pay me my money because I want my money to be saved. Going to the insurance company pay me the money. That's what we call increasing. And how does it work? The insurance company will be paying me the money as you are paying me. If you are paying me $1,000, insurance company will continue from where you stop and be paying me the money. So in that case, you do not have any other person apart from you. It's between you, the insurance company, and the person you are owing. All right, so that's creditors have insurable interest on the life of the debtor. It bears repeating that with life insurance and insurable interest. All right, it's very important to repeat that in life insurance, an insurable interest must exist only on the time of application of policy inception. Did you see here? Insurable interest must exist only at the time of application. It does not need to exist in the time of loss when the policy proceeds are paid at death. Of course, therefore, a policy owner could assign a life policy to a person with no insurable interest in the insured, and the assignment will still be valid. Also, with a few exceptions, e.g., buying insurance on a minor, a person cannot purchase life insurance on another person without their consent. You cannot buy insurance policy for another person without person's knowing. You can buy for a minor. A minor does not need to know. Of course, it doesn't know. But if you buy a policy for that minor, you must have insurable interest on that minor. If that is an adult, you cannot buy insurance policy without the person's consent. Amount of insurable interest. Do we have to know the amount of insurable interest? Individuals are typically presumed to have unlimited insurable interest in themselves. To yourself, you have unlimited amount of insurable interest. When you buy a policy, that amount you bought is assumed to be what you consider the insurable interest. Based on principle of indemnity, a person's insurable interest should be limited to the amount required to return an insured to host after suffering a loss. So you bought a policy of 200,000. That 200,000 is the insurable interest you have in that person, which means if anything happened, that 200,000 is what will be returned. And what is returned to you is what you got to be able to bring you back to your position before you have the loss. All right. Let's look, of course, this is all that we discussed now. Disclosure, buyer's guide. I think we did this in last time. So buyer's guide actually is that every product, let's assume you went ahead to buy a fridge or refrigerator, buy a refrigerator today. You see that there'll be a guide. You buy a television, there's always a guide. So that guide is what will teach you about the product you're buying. That's the buyer's guide. So in life insurance, we still have a buyer's guide. Apart from the one the company will issue you, part of the buyer's guide now is the education we are providing. You can see that most times the insurance company does not do adverts as they used to do before, because they know they have competent agents who teaches people what the policy provides for them. So that's why insurance companies have decreased the extent of them going around advertising their businesses. No, the agents always do the advertisement now. Of course, that's why the agent can collect commissions, and the commissions they're paying now are good enough. The commissions are good enough. So the buyer's guide is given everywhere. For instance, if for those who are coming to Dallas, if you're coming to Dallas this February 5th to February 7th, when you come, you see a lot of insurance companies. They come with their buyer's guide. It's their duty. That is an opportunity for you to get as many buyer's guide as you can for your business. Buyer's guides, pencil, gift items you can give people, can give to your clients. This is the time you can get them. If you come to Dallas, you can get as many as you are. You see a lot of companies, they have the guides, the booklets everywhere. So you come and collect as many as you are to start off your business is needed. Collect pens. You can give your clients pen after writing policy for. In fact, at least the first 10 to 15 people you wrote policy for, you can make it as a point of duty after the whole thing. You give them a pencil from the company. I mean, you give them pen from the company. You give them booklet from the company. Most people, I think we did it when we started. We collected a lot of pen, a lot of pamphlets, pamphlets about the company. Whoever will write policy for. That was the first 10 or first 20 policy we wrote for people. After speaking to you, we wrote the policy for you. We give you booklet and give you pen. So that can be a way to introduce yourself to the business. So the Dallas events give you the opportunity to do that. You come to Dallas, there's a lot of insurance companies. They come more than 15 or 20 of them, maybe there. I come there, as many as that come. You just pick, make sure you get that. Then if you go to Las Vegas, that's where when you're going, you have to have a separate bag that you can pack buyer's guide. You do not get ashamed to pack as many as you can. But normally when we go to the Las Vegas, we normally have some empty box. Normally, no, the men's box is not full. 1 or 2 clothes is enough for us. So in our box, in me and my son, our box will be able to put all those buyer's guide. But in the women's box, their own is always full with their clothes. So you have to make provisions where you have to put buyer's guide. In Las Vegas, a whole lot of them. For those who will be in Las Vegas July, there's a whole lot of buyer's guide, a whole lot. That helps you in teaching. Some people want to know, what information do I have to? You give them that and let them read by themselves. You educate them and give them the booklet, give them pen. They'll be so happy. So Dallas give you the opportunity to do that February 5th to February 2nd for those who will be here. And of course, we said anybody who will be here should let us know. If you're not the person who bring it to the business, let us know, indicate that they're coming. We promise new agent for those of you that are writing the exam. We promise anybody who will come that we're going to pay for that person's hotel. That's a promise we made. And I think either this week will be the last, because we want to book the hotel. So if you're coming to Dallas, let us know so that your hotel accommodation can be provided for you. What we need to know is show us that you have already had your ticket, their flight ticket, then we make the provision for a hotel for you. All right, that's what we do for people who are coming February 5th to February 7th. So that's buyer's guide. Is something that will help you to make start off. You have tools, just like somebody who going to farm work. You have to have machinery and other things that can shovels and other things that can help you to work. Buyer's guide will help you to work. So in many states, an agent must deliver both a life insurance buyer's guide and a policy summary to the applicant. These documents are generally delivered before the agent accepts the applicant's initial premium. So that is a buyer's guide. When you write the policy, that's what we call the policy summary. You see, when that booklet is given to you, that booklet that the agent or the insurance company will bring to you, or that booklet that they will mail to you, or during the period of which you go through the policy. So that booklet, in it, you will see what we call policy summary. You see policy summary here, there. You see delivery receipt there. You see statement of good head there. And some other things about the policy will be there. So in policy summary, you will see the insurer. Who is the insurer? You see the policy. You see every rider that is in that policy. You see how much you're going to pay, the premium. You see if there is a policy that have dividends, you see it there. You see the benefit amount. You see the cash surrender values. You see the policy loan interest calculation. And of course, you see everything about the life insurance cost indexes on that policy. So the policy summary contains a lot of things. Most times, if you just have your booklet, just go to the policy demo. That's the first thing I read before I go through everything. Read the policy summary. That will give you details, short details of what you want in that policy. And even the one you have at your job, which is the group life insurance, they're supposed to give you that. They're supposed to give you that. And equally, they're supposed to give you the policy certificate. And the company is supposed to keep the master contract. That is what the law says. But I don't think any of us here have a certificate from our insurance certificate from our job. For some of us who are working, who have policy insurance coverage on their job, do they give you the certificate of insurance? Please, anybody can tell us. You can unmute yourself and tell us. Does anybody have a certificate of insurance on the group life insurance they have at their job? Anybody? I don't think. I don't think. How many of us here? 13. Anybody? I think most of us are working. Anybody who have that should let us know. At least we learn from that person. I don't think. Huh?
I don't.
I don't think anybody. Who is Kate Okocha? Kate Okocha? Please unmute yourself. I have not seen this person here before. Kate Okocha, good morning. Please, let's hear your voice. We want to know who is here with us. We want to know who they are, please. Maybe the person is not supposed to be here. Kate Okocha, can you say hi to us? Unmute yourself, please. Kate Okocha. I think I'm pronouncing it well, of course. Kate, can you say hi to us? Unmute yourself. Look at that one. Unmute yourself. We want you to speak. Because I'm going to start to take anybody out. If anybody we don't know, there's no need staying with people you don't know. Of course. So please just unmute yourself and say hi and tell us who is your business partner. That's what we want to know. I'm going to give you some 5 minutes. If you don't, I will take you off. That's the truth. I want to know why you're here. I want to know who brought you here. And I want to know when you're taking your exam. So these are the 3 things we want to know. That helps us in our records. So Kate, all right, he takes himself off. That's good. You see, that's why sometimes we have to find out. She takes herself off. Good. So please don't come back again. All right. So if somebody who comes here cannot want to speak and tell us who he is, I think it's good for that person to go off by himself. Because if you cannot tell us who you are, there's no need being here with us. All right. So the exam tips we're going to look at is agent must provide required disclosure before collecting the first premium. Failure to do so can lead to regulatory non-compliance, a detail that appears frequently on exam questions about ethical and legal responsibility. Remember, even in your work, for some of us who have, who works in a healthcare, before you see patient, you can see that the patient, there must be a consent signed and disclosure signed. That disclosure form gives the provider the opportunity or the right to source for your information. So when you fill application, for some of us who have policy here, we know that, look, when you are signing the final part of the application, you are signing a disclosure form that gives the insurance company the right, more especially the underwriter. It gives the underwriter the right to seek information about you. Yes. So the disclosure form must be signed. It's very, very important. Disclosure form is very, very important. The purpose and characteristics of life insurance underwriting. Of course, all of us have known why underwriters are there. The Kate Okocha is back here again. She took herself out and took herself come inside again. I'm going to remove you, Kate. If you do not speak, I'm going to remove you. That is just a thing. If you do not speak to us, you're going to identify us, introduce yourself to us. Introduce yourself. I give you 1 minute to do that. I'm going to remove you. Please. Kate, introduce yourself to us. Kate, Miss Kate. All right. So I removed her. She's not supposed to be here. All right. So we're talking about underwriters. At least, who doesn't understand what underwriters are? Who the underwriters are? Who doesn't understand underwriters? All right. And who doesn't understand what adverse selection is? Of course, all of us knows what adverse selection is and why underwriters are there. Of course, from beginning, we said underwriters are there to help checkmate adverse selection in insurance business. That's the reason why underwriters are there. So I don't want us to waste time on it again. I know we did all this in the other time. All right, the insurable, the proposed insured, insurable. Is the proposed insured insurable? This is another one. If you are going to insure somebody, if you're going to write policy for that person, the first thing that will come to your mind as an agent is this person insurable? Of course, that is the first thing that comes to you. This person I'm going to write policy on, is that person insurable? If that person is not insurable, of course, you're going to put the application. You want to try, but within you, when you're writing the application, you have already known whether this person will be approved or not. But if you do not try, the applicant may think you don't want to help. For those who have understood that you're writing policy for them, you are helping them, they are not helping you. So for such people, you may say, if you do not write the application, you may feel that you do not want to help her or him. So the person is write the application, but within you, you have known whether the application will be approved or not. If somebody have a high standard, substandard risk, higher substandard risk, definitely you have known that that person may not be approved. So the law of large numbers we are talking about is that tendency for people who are of higher risk seek for insurance coverage. That is law of large number. So you can see that most people who have higher risk will always go for answers. And again, in every community, if there's a cause of death, the issue of people dying in a particular cause, if let's assume somebody go for a particular city, and that city is dying of malaria, for those of us who know what malaria is. So the tendency of somebody dying of malaria in that city is high. If you bring 200 people, you now bring 300 people. The tendency of people who dies in the 300 people will be more than the tendency of people who die from the 100 people. So that is a lot of large number. What this is we are defining, we are not defining exactly what the word are. We want to make it a way that even if you see it in the exam, you have already know what it means by your own word, so that you can get the answer correct. We're not going to, nobody's cramming any definition. No, don't cram. You just want to know what it is, what it means, by your own word. It means. So if you see it in the exam, it'll be easy to identify the meaning. You don't want to go and start to say large number is this. You want to define the way it is. If you define it that way, you're not going to get it. In fact, it's not going to go along. It will be a big problem. You just want to know what that means, so that when you get into the hall, during the exam, if you see it, you know what it means. By your own definition, you know what it means. You don't want to go around to begin to cram word. No, don't cram. In this exam, do not cram anything. Just if there's like law of large number, you know what it means. Period. That's what you want to know. Insurable interest, by your own definition, you know what insurable interest is. Believe you me, if you enter the hall, you get it correct. You don't need to begin to define it as it's stated here. No. If you go that way, it's gonna take you 300 years to pass. So that's what you're gonna do. Do not go and begin to cram anything. No cramming. No. Use your word to define anything. The way you understand it, the meaning, you are okay. I think somebody passed exam on, was it on Friday? Somebody, Said passed. I thought Said would come this morning. She passed on Saturday. I thought she would come this morning to say hi to us. Said, are you here? No, I don't think so. She's supposed to come this morning to say hi to us. So you do not have to do what? Cram. Don't cram anything. Don't bother yourself by cramming. No. Just know what each word, know what it means. That will what will help you to pass. If you begin to go cram, no. You're putting yourself into big problem. How many are you going to cram? There's a lot of them here. So underwriting is a collective process involving several key players with distinct responsibility. As a new insurance professional, you will need to understand not only your role in this process, but also how you interact with others. When your client asks you who will be reviewing their application, you should be able to explain each person's contribution to the final decision. So for the state exam, a person needs to understand the parties involved in the underwriting process to answer questions correctly. Who are involved in the underwriting process? Of course, you should know in the underwriting process, it starts with you, the field underwriter. You are the first port of call to the client or the customer. So the underwriting business or process starts with you, the field underwriter, the agent, the producer. You are the first person to start the underwriting process. And who, again, is the most important person? The underwriter in the office. The underwriter in the office. Another person that involved in the underwriting process. So these two people play a good role in the underwriting process. So for the state exam, it's a person needs to know, to understand the parties involved in the underwriting process to answer questions accurately. A producer needs to understand who they need to speak with to complete and sign insurance application. Also, producers need to know who to reach out if questions are raised regarding what insurance application or insurability. When taking application for potential insured on behalf of the insurer, a producer performed the extremely important initial step in the underwriting process, referred to as field underwriting. So as a field underwriter, you did the initial step in the underwriting process. Sometimes they write it, you see it in exam, more especially in the state part of the exam. The state part of the exam is very easy. That's the truth. If you're going to write this exam, the state part of the exam is easy. Is easy, which the easiest part of it is that state part, which has 35 questions. The 35 question in the state section is the simplest of all the questions. And that's why before you go for the exam, you must make sure you study your state. Study your state part of the exam. It contains only 35 questions. The national, which we are doing, contains 110 questions. So that if you have Excel solution, there's a provision for you where you can study your state part of the exam. If you have FX, exam FX, there's also where you can study your state part of the exam. But I'm telling you the truth, the state part of the exam is the most easiest because there is not much scenario questions. It's questions, one single questions. I mean, one single answer. It's not scenario questions. But in the national, you have a lot of scenario questions. And I told you, there's no way you can pass this exam without doing the state questions. If you like, get the national 100 over 100, and you do not do the state, you're not going to pass. That is the truth. So it's your duty to go back, make sure your state part of the exam questions, you study it, know it before you write it, before you go for the hall. And again, I want to remind everybody that for those who are going to write this week, if you go to the hall, the first section of the exam is the national part. You do the national part. After you finish the national, they will, on your screen, they will write, you have finished this section of the exam. Do you want to continue or no? That is the question they will ask you. After you finish the first 110 questions, they will ask you, you have finished this section of the exam. Do you want to continue or not? Please answer, you want to continue. If they ask you, do you want to continue or no, you say no, you failed. They will log you out. And when they log you out, that is no matter what you do on the national, you're not going to pass. Because it's as much as you know the national laws, they want you to know your state laws. Reason why you want to know the national law, because this exam is only once. What I mean by once, if you are writing from Texas, you pass Texas license, you are covered of all states in America. You're not going to write Texas, write Oklahoma, write this, write that. No. You pass one state, that one you pass covers every other state. So that's why it's very, 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 very important you do the state and also do the national. The national represents every other state apart from your state. Then the state, your own state represents your state, which means you have to do the two before you can pass. So the feed underwriter is you, the producer and the agent. We now say the producer is also responsible for providing any required disclosure of information practices of an applicant, such as notices regarding replacement, life insurance buyer's guide, and an outline of coverage or policy summary. So all those will be on the booklet that will be given to you. Parties involved in underwriting. Who involved in underwriting? Of course, the applicant is simply the person requesting the insurance and completing the application, and with the help of licensed producer in many cases, but not always. The applicant is that person who is to be insured. He is the applicant. And as a producer or a field underwriter or an agent, you help the applicant to complete the application. The applicant is the proposed insured. Is the person whose life is to be insured. If approved, of course, the policy owner is that person who have the right on the policy. The insured, or the proposed insured, may not be the policy owner. Sometimes the proposed insured may be the policy owner, depending. You are the policy owner and the proposed insured if you're writing policy for yourself. You are the policy owner and not insured when you are writing for your children, your husband, your grandma, your grandpa, your parents. So all those are the insured while you are the policy owner. Again, I said there is always clarity looking for insurable interest during claim, when the claim is met, is being sought for, when you are the policy owner and you are also the insured. I mean, you are the policy owner, you are the beneficiary, and the insured is probably your son, your father, your grandma, your grandpa, or your every other extended family. So when you immediately become the policy owner and you are insured, they will ask you for insurance. They want to see whether insurable interest exists when the claim is being paid. If not, the insurable interest starts with the application and ends with the application. Remember, it normally comes in the exam. Insurable interest starts with the application and ends with the application. So you will see it in the exam. So the policy owner retains all of the policy rights and options if the application is approved. The policy owner also typically serves as the payer. The policy owner serves as the payer, which means when you are paying for somebody's policy, you are the policy owner, you are the payer. The person ultimately responsible for ensuring that the premium are paid when due. You pay the premium. Who pays the piper dictates the tune. So you determine sponsor of the policy. You can make withdrawal at the policy. You can take a loan from the policy. You can appoint beneficiary. You can remove any beneficiary. Remember, we have two types of beneficiary, revocable and irrevocable. So those are the things you have to know. The underwriter reviews the insurance application, examine any additional application form information, and classify the degree of risk posed by the proposed insured to determine whether coverage should be offered and if so, at what premium rates. So that is the work of underwriter. Let's look at this example. It says, Fannie works with an insurance producer to complete an application for a 20,000 insurance policy on her life. On this situation, Fannie is the applicant, the proposed insured, the policy owner, and the payer. Remember, when you do what? You write policy for yourself, you are the applicant, you are the proposed insured, you are the policy owner, and of course, you are the payer, you pay for the policy. So after completing her application, Fannie informed the insurance producer that she also wants to obtain insurance for her 5-year-old son. In this case, Fannie is the applicant, he is the policy owner, she is the policy owner, and she is the policy owner, but her son is the proposed insured. So in this case, if anything happened to the son of Fannie, what's going to happen? The insurance company is going to want to find out whether Fannie have insurable interest on the insured, which is her son. Of course, she have. So let's look at it. It said, through the parties of an insurance contract can be complicated. The vast majority involve only one party, typically the policy owner. Payer, applicant, and proposed insurer are all the same person. Policy owner, payer, applicant, and proposed insured are all the same person. If you are writing policy for yourself. If not, you are not. So for this exam, assume that this is the case unless a question specifically suggests otherwise. The policy owner is the same person as insured, is the same person as what? The applicant is the same person as the payer. Please, in case otherwise stated, is the same person, please. So with an exception, e.g. buying insurance on a minor, an individual cannot purchase life insurance on another person without the person's consent. Please know that we have said that several times. You cannot buy insurance policy for somebody who do not have a consent on, except that person is a minor. And what is the minor age? What's minor age for your state? Can anybody tell us minor age for his or her state?
From below 18.
Below 18. I mean, your state, your own state.
In the state of Texas, below 18.
All right. Yeah, in the state of Texas, below 18, which is the maturity age in Texas is 18 years. Correct.
Yeah.
So another person, state here, I want everybody to say
Pennsylvania is below 18.
Below 18, which means the maturity age for Pennsylvania is 18
It's
years.
18 years, yes.
Meaning 18 years, that person can be can go to claim the money or do anything. That is what it means. That person will be in the contract. That person can be a beneficiary. You can put that person as a beneficiary. But below 18 in Texas, that person is not fit to go to insurance company and ask for benefit. No. That is the bad thing about it. That person, the Texas law believes that person cannot handle huge money. But can you put that person as a beneficiary?
Yes.
Of course. But they will regard him or her as a minor. A minor is not fit to sign a contract. That is the law. So every state has their own maturity age. I know New York is 14.5 years. So
Oh, really?
yes, New York is 14.5 years. That is the maturity age. You know, everything New York and California is different altogether. So please, it's your duty to find out the maturity age for your state. You're going to see it on your own state exam. So for those from Texas, you already know your own. New York is 14.5 years. I know that one. So for other states, find out the maturity age for your state. Please, please, it's very important. So regardless of the policy size, an application that raises questions on the underwriter's mind can also trigger a review of other information sources. The most common underwriting information sources include the application, medical reports, and attending physician statement, the medical information bureau, special questions, inspection report, and credit report. So this is for your policy to be approved. All this information is what they look for. Does your credit report have anything to do with your policy being approved or not? Of course. Why? If they find out that you are the person that doesn't honor your payment, their question will be, if we enter into contact with this person, is the person going to pay? We see from her record that she doesn't pay her things at all. But will it make you not to apply? If you have bad credit, no, apply. So some people, they say they have a bad credit. No, apply. That may not be a condition why they will deny you, of course. But it's what I'm saying, that some of the things they look at. Inspection report, of course, they go through it. Special questions. Through the question, find out what happens. Questionnaires, I mean. So mortality table shows the rate of death in a defined population over a selected period. Survival rate from birth to death. The tables also show that the likelihood of death increases with age. Of course, all of us know that as we grow older, our death is approaching. This is why age affects insurance costs. The more you old, the more your premium. Mortality information also indicates that the women satisfactorily live longer than men. Do you guys hear it? Women live longer than men. That is the reason why in life insurance, the premium for women are cheap compared to men. If you bring twins, a boy and a girl born twins, maybe they just born them now. You want to write their policy. These people never have any record though. They're just as innocent as a bird flying on the air. They don't know anything. They don't have any medical condition. You write policy for that man, for the male, write policy for the female child. The policy for the female child will be cheaper than the policy for the male child. So, because they assume, or not even the assume, is working, that women live longer than men. So based on that, men are exposed to more risk than the women.
Yes.
So that's why they have their own premium is very low. Women's premium is low. Men's premium is very high. Very, very high. More especially when it gets up to 50 years. Oh my God, it's very, very high. Than compared to women at 50 years. Because they believe the woman at 50 years may have another 50 years to live. But the man at 50 years, they don't guarantee that man living another 30 or 40 years. That is one thing that all of us should know. So that's why most times it's good, most especially, it's good to do it as early as you can. Honestly. It's good to do policy as early as you can. You don't need to waste time because tomorrow may be too late. Tomorrow may be too late. So it brings us to that issue of go to some person, the person who bring you to that business. Make sure the right policy, no matter how small it is. So if you cannot go for big one, start from small one. When you get the knowledge, you're going to buy more and more. But however, remember that time waits on nobody. As you add another age, the premium goes, add another $50 to $100, or even $50 to $20, $20 to $50 or $60 or $100, depending on your risk level. So do it now. All right. So a producer's feed underwriter also assists the home office underwriter. The agent should complete the application by providing as many details as possible. Once the application is forwarded, to the insurer, the underwriter may require additional information from the applicant's doctor to assess the risk. However, this is only permitted if the applicant signs a disclosure statement. So did you see it? A disclosure statement is a statement that gives the insurance company the right to go for your information. So in some instances, insurer use a non-medical application, which requires no additional information other than the application. So most of you see that some people put the application today, is approved the next day. They don't go for any medical information. They just look at the information you put there and approve you. Yeah. Some people within 24 hours, the application are approved. So this type of application is most often used for younger proposed insured, e.g. age 20 and 30 below, seeking a limited amount of coverage. Yep. Our pre-selection underwriting activity, selecting underwriter, I think we don't need to do anything. Underwriting outcomes, we don't need to. The underwriting outcome is that either they approve you or they deny you. Privacy notice is that you have to sign a disclosure form. And apart from disclosure, the disclosure form will now give you a knowledge of what about HIPAA. For those who are healthcare, knows what HIPAA laws are. Is a privacy notice, a privacy law that you have to keep every information you receive from people. Personal information have to be secured. In a life insurance business, you are given 5 years to keep somebody's information secured. After 5 years, you are not accountable to it. After 5 years, they take you to court about a particular client. You don't have any information about that client because it means that by then you must have destroyed the information. So you can not destroy any health information in life insurance except that information have stayed with you for 5 good years. So of course, everybody knows that HIPAA is a federal law. And what does it do? It's an established national standard to protect sensitive patient information, PHI, from disclosure without the patient's consent or knowledge. So whenever you sign this disclosure, you have signed that, look, you can access my personal information. That's the meaning. So you don't just sign it for signing sake. Immediately you sign it, you have given that person right to go for your information. It's just something as signing for that disclosure information too is equally signing for HIV consent. So if they come to take your blood, they're going to do what? Equally run HIV test on you. There's one good thing about this business. If I tell you the number of people we have saved from death, you will say, oh God, I'm telling you. Because some people are moving around. They don't know they are sick. But because of this business, some of them, they write that application. They say they are 100% okay. They don't know that the doctor have already put information on their record. So when we submit the application, the form, what the insurance company, they will deny it based on what they see from MIB and the APS. Then the applicant can argue, say, oh, I'm not that. Then say, go to doctor, go and meet your doctor. More especially some people who have recovered from diabetes, who their AYC is almost 9 point something to 10. I'm telling you the truth. Then for men, there's some of them, the PSA is so high, they don't know. So it's something with women. I mean, women, most importantly, is the one that helps a lot is issue of BP and blood sugar. That one's the thing that we normally, by the time you do those things, they come to take blood, they've discovered so many things. I tell you the truth. And they've denied the policy. And when they deny the policy, that will be a call for the applicant to go and see his or her doctor. You have saved a lot of people, I'm telling you the truth. So HIPAA mandate applicant must receive a privacy notice outline how their personal information health information will be handled. So exam often tests your understanding when and how privacy notices are required. So now we enter into, we have done all this in the other time. We enter into application, we talk about the general application information and the medical, we said application in three parts: general, medical, and health, and agent reports or statement. We have done this in the other day. I think we have done it the other day, remember?
Yes, we had.
So what we are doing today is just repetition of what we have done. What it means that in the evening, we're not going to touch, we will just, because we're supposed to finish this one today. That's our target. So let's see the general application. What do we have in the general application is what? The application, we know this policy tab, the amount of insurance, name and relationship of the beneficiary, other insurance owned by the proposed insured. Why do they ask you whether you have other policies? Yes. They want to know whether you are trading that policy. No. They want to know whether you are trading the policy you are buying now with another one.
Oh.
That's what, whether you owe any insurance. They want to know. If you are trading that they may not want. Just like you telling somebody to cancel his policy. You know, it's not the best advice. Somebody telling another person to cancel his policy. One, apart from that person losing money, you lose the contestability period. You lose, remember your health may have changed. Your age may have changed. So the premium rate you get that time you wrote that one, compared to what the premium rate you're going to get now will not be the same. So do not allow anybody to come to your house today to cancel your policy. I'm telling you. It's just our people, is our community, we do not know. Most time we do things that we're not supposed to do. Yeah, if not, there's no way anybody who is working 12 hours, work 40 hours for a week, cannot be able to write his own, no matter no matter what that person passes through, cannot be able to write up to 100,000 policies for him or herself. I'm telling you the truth. But most times we do those things that we're not supposed to do. Those things takes our money. The money we pay in Owambe alone for those of us who come from Nigeria. The money we pay in Owambe, all those parties alone, all those hair ties that nobody don't wear, all those clothes. But you need to come to my house to see hair ties.
It's not only your house, it's everywhere.
I'm going to pack all of them to sell because some of you're not even wear it one day. Hair ties full everywhere.
Yeah.
Full everywhere. For clothes full everywhere. God. So those things, you can see that when you channel those money to write a policy that will cover you, you have done yourself good thing. If they call you, tell them that you're not available. Of course, when you start this business, your thinking mentality will change. In fact, the way you relate to people will change. Everything you are doing will change. More especially for our women that buy this, it will change. You see that those things are not necessary. What is really necessary is the food you eat, the money you use to buy your food. The money you use to buy clothes it's not really, more especially those clothes for one band, those parties. It's not necessary. It's not necessary. It's only one day, they wear that tie one day. So pack all those money, go and use the right policy for yourself. We save your life, save your family. So applicants that are pending for the proposed insurance, so all of them are what is on the general application. Then we have the medical section of the application where all the information about your health are. Every information, that's where they go for APS, where they go for MIB. Questions they ask you about your health history, all those are the medical and health history. That's in the part 2 of the application. Part 3 of the application is the agent report or statement. That's where the agent will confirm, look, I see this patient, I see this applicant, he is a human being, through his ID. They will ask you, where did you write the policy? Where did you write which place, where the application was done, maybe in the client's home or Zoom. If it's in Zoom, the person have to show you his ID. So that is what it is. Sometimes the person have to stand up because you want to assess whether that person have any deformity or not. All right. So I think we have gone past what we're supposed to do. This is 10, almost 11 o'clock. So we're gonna stop. So please, everyone have to remember what we did. We're not supposed to do it again. We have done all that. In fact, this is where we stopped the other day. I cannot remember. This is where we stopped. So this morning we would have started as completing the application. I'm telling you. So all those we have been doing since morning is just a repetition of what we've done. We would have start at completing the application. This is exactly where we would have stopped. And that's where we're going to stop now. So that in the evening, we're going to start from complete the application. Probably we may finish this in today to enter chapter 8. So once again, for anybody who's going to write the exam this week, go through all the chapters. Tell us the chapter that's very, very important for you that you have not been able to touch or you have not been able to study. Or you study it, it's very difficult. You could not understand it as you like. Let us know so we can go through those chapters to help you go and pass, please. There's nothing to be ashamed of here. Please, all of us are adults. Be open up. Say it as it is. No, we are old enough to hear everything we go to hear. But especially, everybody's busy. Everybody's going to work. Everybody have family, bills and everywhere. So we understood. This is another somebody trying to reshape his life by saying, look, I need this financial knowledge to help my family. I need this financial knowledge to be able to raise my children well. Because more so, this we are doing, do you know who will benefit more? Our children and grandchildren. That's who it benefits more. Our children and grandchildren. This for us, all of us, some of us are already come late. That's the basic truth. We're already late. More especially, some of us, we're gonna try to put policy, whether they approve us or not, we still have to make an impact. If they approve you, you see that the premium you're paying now is more than compare what a baby can pay. So those mistakes we made is what we don't want to make our children and grandchildren to make. That's the basic truth. So what it means that your children, your grandchildren, tell them they should have policy. For some of us have a grown-up children that are working. If you talk to them, they will say, Mom, Dad, they're scamming you. That's what they will say.
That's true.
No, I'm telling you, that's what they will say. They're scamming you. But you have to be talking until they get reason to what you're saying. Because you don't want the same mistake you made for them to make it. If you talk to them, oh, Mom, Dad, they're going to scam you. That is their own understanding. But continue to speak. Most often, sometimes bring them on the Zoom. For some of them, they want to have materials. They say, oh, can I give me something to read, Mom? Dad, can you give me something to read? Let me see what they are. If you come to Dallas, pack orders and give them, let them read. Or you can drag them to one of the sections, one of the teachings. May not be on the exam review. Drag them to one of the presentations. Let them hear. Let them hear people's confession. So we don't want them to fail on where we failed. Because we failed because nobody taught us as we are going to teach them now. So please, bring their children in. For us, in my home, it's no longer a law. It's somehow a routine, a mandatory, that is you're turning 18 years. Since Texas, the majority age is 18 years. As you're turning 18 years in my house, you must have life insurance license. It becomes a law. In fact, we're not even discussing it. It's something you know that will happen. So all my kids too has our life insurance policy now. I mean, our life insurance license. So you must. You don't need to, in fact, nobody's telling you to do the business as a child, but get the license. During getting the license, you get the knowledge. Nobody will tell you to do that. Imagine a child who's just started work. And when they start working, they'll start working about 22 or 23 or 24, 25 or 26. They put at least, they can be able to afford $1 million policy. They can. They're not using it. Most especially those who are still living with their parents, they can afford more than $1 million policy. And they put that policy by the time they get up to 50 to 60 years. You know how much cash value are there? But for us who are above 50, 60, it's difficult. But for them, they are the ones that we are preaching this message for. They should not fail where we are fed. Nobody give us the knowledge. Imagine me, I wrote my first policy 2007. 2007 when I wrote my first policy. Do you know what? It's a term life insurance. Do the agent who sold the policy know? He doesn't know. Did he educate me? No, he didn't educate me. He just come to the office and talk. In the office, about 14 to 15 people live in a very big office. I was the only person that bought the policy that day. Everyone was laughing at me. Do my colleagues know why they're laughing? Because the ignorance. Me too, I was ignorant. I just decided to say, I'm going to buy it, and I bought it. They said, but do you want to die? I say, yes, when that death come, let it come. So, yes, in office where we have 14 people, both men and women, both married and not married, it was only me that made that decision. The decision I made itself was wrong because I bought the wrong one. I bought the wrong one because the agent who sold it to me.
You even tried.
No, but I bought the wrong one.
Yes, but you
The
tried.
agent, because I'm not blaming the agent who sold it to me. The agent who sold me, if you have educated me well, I don't think I would have bought the wrong one.
That's
However,
true.
the factor for me then would have been, do you have the money to pay? But I believe you mean, if I have the good education then, I don't think I would have been able to afford paying $200 or paying $100 and something dollars. At least paying $200 a month for that policy, if it's a good one. If I know that this policy can accumulate money for me, if I use so age, I can get money from there. I will seize everything to make sure I get good one. But such education was not provided to me. They sold me term life policy. The only thing I insisted then was this. I said, look, I told the man, say, look, if I'm going to buy this policy, if I'm going to buy it, what's going to happen? What if I could not pay again? What happened to the one I pay? He said, oh, you're gonna put something for me. I said, what is that? So you're gonna put a return of premium. It's now that I know that question I asked that day, what it means, because now I've known the business. It's now I know that question I asked that day was whether he will give me a return of premium rider. Return of premium rider is only till you have a life insurance policy and you be paid. If you stop paying, the money, the ones you paid before will be returned to you, the premium. After they make a reduction of your of all the expenses.
Is it only on term life or both term and permanent?
No, it's only on term life insurance. I have return
Okay.
on premium.
Oh, then I
Remember,
was duped.
you remember in permanent or whole life, those ones have cash value. So you remember when you pay your policy, I've said it several times, when you pay your premium in your policy, in the term or whole life that have cash value, when you pay your policy, that money, that premium money you paid is charged to different sections.
Yeah.
Remember we said some goes to cash value.
Yeah.
Some goes to cost of insurance. Some goes to reserve. Some goes to the ones. Some goes to of course represent the premium. Then about 4 or 5 channels that premium will go. So based on that, there is no return of premium rider. However, the one that goes to the section as a cash value is the one you cannot forfeit. So they use the word non-forfeiture. So whatever happened, that one that goes to cash value will be returned back to you.
So non-forfeiture, it applies to the permanent insurance that has cash value.
Definitely, yes. Yes. So the one that the part of the premium they channel to cash value is the one non-forfeiture that will be returned to you if you cancel your policy after they have removed all their charges in terms of administrative expenses. They will return it to you. But in term life insurance, it's not channeled that way. So the money that you get in term life insurance may as well be more than what you're going to get on the cash value life insurance. So the one on top,
Is non-forfeiture a rider?
no, it's not a rider. Cash value is not a rider. Non-forfeiture is not a rider.
Does
But
every whole life or permanent insurance life insurance automatically have non-forfeiture as a
yes,
part of it?
if you have cash value, you have non-forfeiture, yes. But term life does not have it. Term life, you have to have this attached to you, what they call it, you have to have return of premium. You have to have a return of premium, which means when you are buying the policy during the application phase, you must have to attach return of premium rider on it. And remember, you pay for it, return of premium rider. So the one the man gave me then, I was paying for it, the return of premium rider. It's a little cent. Remember what I said about rider. Rider is an addition. It's something to add more benefit to your policy. So if you want more rider, you have to pay more. So that's what it is. It beautifies your policy. It makes your policy more beneficial. So that's what rider is. So I think Austin want to ask question. Austin, go ahead.
Hello, so thank you very much, sir. In the beginning, I raised my hand. I wanted to ask a question. You talked about the free look period. I've always known in 10 days, but you mentioned 30 days. What's that? Or I didn't hear very well.
All right. Free look period is 2 days. It's two types. One, remember the free look period is that when they submit, give you the booklet, when you have signed the policy, they return the booklet to you. That is a free look period. When they return it, they give you so number of days to go through the policy to either you take it or you leave it. Because remember, it's a counter offer from the insurance company. What you write in the application, there may be changes. So they now approve your application, you pay your premium, they approve your application, they now send you a booklet of the insurance, the one they approve. That is what we call counter offer. It comes to you. When it reaches to you, that is when the free look period starts. So free look period is 10 days. When that booklet is given to you by the agent or by the insurance company, they come to your house to deliver it to you. The free look period is 10 days. Then the free look period is 30 days. If that booklet was sent to you through mail, you receive it in your mailbox. The free look period is 30 days. So this is two days, two periods you should know. Normally, people get confused. They thought free look period is only 10 days. No, please, just make sure you know the two, because if question may come, most people, when they see free look period, they thought it's 10 days, they put 10 days. Now reading the statement, whether it's delivered through mail or whether it was given to you by the agent or by the insurance company themselves. So that's it. Any other question, anybody?
Thank you, sir.
Yeah, any question by anybody? All right, so if there's no question, we're gonna see again by, I think 6 p.m. Yeah, 6 p.m. today. All right, so good day and everybody. Enjoy your day. Bye.
Thank you. So don't forget the YouTube posting.
Yeah, I'll do it now.
Thank you, sir.
Yeah, bye-bye. See you guys in the evening.
This is Okocha, the one that you remove.
I remove it because
why are you not talking?
Please, today is my today is my first day.
All right.
I was registered last week Friday. So when they send me the ID, this thing for me to log in, when I log in, I slept off. Please, it's only me in the house. The time that I had Okocha, I was just tapping. Sorry, sir.
No problem. I want to know, because sometimes people who do not allow to come here will come here. You know, everyone wants what we are doing. Let me tell you, like what our hierarchy is doing, most people are not doing it, because most people do not have that time to sit down and begin to teach people. No, most people do not do that. So, but in
Okay, sir.
hierarchy, we will carry everybody along. We want
Okay,
everybody
sir.
to get to succeed where everybody have succeeded. So
Okay,
it's
sir.
not about it. I just want to know that we are with human beings. That's the only thing I want to know.
I'm a
Also, you're
human being,
welcome.
sir.
Yeah. So
Thank you.
joining. Who is your business partner?
It's Amarachi.
All right. So
Yeah.
which state are you calling in from? Your state?
From Texas.
Oh, Texas. All right.
Yes,
So
sir.
those we are saying, when we come back on in the evening, if you log in the evening, I will show you the part of Texas where you get Texas laws, where you're gonna need to prepare for the Texas section of the exam, which is the state section of the exam, which have 35 questions. I will show you where you're gonna do that. All right.
Okay.
Robert, are you able to show me in Pennsylvania where I will get one?
All right.
Because
Yes. All right. The same thing. You have exact solution.
yes.
All right, so we're gonna do it. We're gonna do it when we come back in the evening.
Okay.
All right.
Okay.
All right. So see
All
you
right.
in the evening by 6 p.m. Central Time, 6 p.m. Yeah, good day.
Okay.
All right.